Hi, I'm Tom Lydon, editor of ETF Trends, and I'm here with John Feyerer and Dan Draper from Invesco PowerShares. Gentlemen, welcome. Great to have you.
Great to see you.
Great to be here.
You folks have an important anniversary to announce this year with a lot of success with your partnership with the folks at Rafi, correct?
Absolutely. Happy birthday, Footsie Rafi. It's going to be 10 years later this year, and we're super excited. If you look at the way that PowerShares from the beginning has tried to provide a broad toolkit to investors and their advisors to build better portfolios and outcomes. I mean, Footsie Rafi sits right at the middle of that. And at the time when we were talking to Rob Arnott and his great team at Rafi, a lot of skepticism. This is new ideas, new ways of investing, but it's amazing now to have 10 years of history to go back and kind of look, and certainly for most of those investors and advisors who've been with us over the 10 years, really great performance.
Well, creating a fundamental index and actually you folks having the guts to partner with them 10 years ago was a little bit novel. And it didn't go as smoothly as everybody thought, John.
Yeah, well, the timing of the launch of the ETF, I was actually at PowerShares at the time, and I can distinctly remember it was right after the seminal article, Fundamental Indexation, had come out in the Financial Analyst Journal, where Rob had reviewed the research and really talked about the critical element of severing the link between price and weight in the portfolio. And so quite a bit of controversy, and as we stand here now 10 years later, I think it's interesting to look back because so much of the criticism at the outset was this is just a repackaged value index. Well, guess what? We have 10 years now of live data, and we have 10 years during which growth outperformed value. So if that was truly the case, you would expect the Footsie Rafi strategy to underperform, when in fact the exact opposite has happened. Excess return in the tune of about 150 basis points. So certainly we believe it's a proof point around the strategy, and oh, by the way, I think it's also one that a lot of feedback we've gotten is that type of return stream would be the envy of many an active manager. So we're really pleased with it.
It sure will. Well, congratulations. But Dan, when you talk about growth, and as we look at today's market, a little bit long in the tooth, we look back at during the financial crisis, the underlying index was actually selling financials,
yes,
going into the decline, and then after the decline, going in and buying back up because they showed value. That takes a lot of guts for the average investor to do, never mind the average advisor.
It does. Well, if you think about over the last 10 years, the real forefront thinking around behavioral finance, well, this was really an approach to really addressing exactly what you're talking about, this herding mentality. I shouldn't sell at the top and buy at the bottom. It sounds good, but can you actually do it in practice? So this is really why for us to provide in a transparent, low-cost way for investors to be able to systematically take advantage of this kind of swings and crowd and herd behavior over time. And this is exactly what I think the fundamental indexing story does.
So sitting in advisor shoes today, John, and you have more clients adding more money, how does this approach help?
Well, this approach really, as Dan pointed out, brings about discipline, investment discipline. I always find it interesting to look back. The study was actually just updated here recently, Russ Cannell from Morningstar, entitled Mind the Gap. And it's just a reminder of when it comes to timing investment decisions, how poor investors are at doing that. And this is an area that we think really financial advisors can step in through a disciplined, rules-based, smart beta strategy to really help add value to investor portfolios.
Well, you folks do a great job on your website explaining the basics of the discipline. So if folks go to PowerShares.com, they can get the whole story in white papers on the strategy. Is that right?
That's right. And I think, look, every time we come up with a new idea or concept, we really try to put ourselves in the advisor's shoes and really think about that not only do they need to understand the story, but they have to explain it to their clients. And ultimately, this is where I think the Footsie Rafi strategy, it's intuitive once you understand it. It's also relatively simple, but it's powerful. And I think it sounds easy 10 years later, but when you're going through that process, and this consumes 24/7 for us every day, thinking about how we can get to that type of solution. And again, we're very proud of this, but we're definitely looking forward to the next generation of products as well.
Great. Gentlemen, thanks for being with me.
Thank you, Tom.
Thanks.
Thank you.